arrival. I have had a late babysitter pickup, and so I was trying to get Sydney out the door. I totally forgot that Bill's teaching in Orlando. So there you go. It's weird to have him teaching on a Monday, Tuesday after a holiday. I just spaced it. So there you go. Nope, Scott, you're broken left. Yeah, and it's never an easy move to transition her out to the babysitter. Yeah, she'd rather be here trading, I think. All right, so as we begin, just as a reminder, I'm not a registered broker-dealer. It means I don't give individualized trading advice or recommendations. And, you know, trading has risks, so paper trade and use caution before moving into any real money positions, as you know. And I don't have any trading restrictions. As I start sneezing. All right, so let me make sure I missed any questions. Scott asking, did I forget you? Never. I try to all the time. I just can't. Just kidding. Of course not. I am very excited to see some of you guys in Chicago next week. Just make sure to do a game version of trading. I like it, Dre says there should be a game version of trading where you can enter and exit and see if you would be profitable over a period of time. It's called paper trading, but we could do a different version too. You're right. It probably would be kind of fun. But that's paper trading, probably not as easy or maybe as exciting for me to game. That's it. My kids would be all about it then. All right. And Joseph's talking about Apple. We have all sorts of things to look at. All right, let me get rid of this disclaimer here. Hang on 2 seconds. What of this? I was wondering if Bill would want to pop in at some point from his class, but I don't know. Let's look at right over Mac research. There we go. Actually, what might even be better, here we go. There's my tab I'm looking for. All right, so what this will do, this will give us, I've got my 5-minute chart, kind of that big picture look of the 5-minute chart on the left, daily chart on the right. Let me shrink this down a little bit. So we've got our 2 time frames here. There we go. And talking about the S&P, Dre's bringing the S&P up. Waiting to see if the S&P can break the 20 moving average. It's funny. It feels like almost every day lately the markets have been slow, but then there's these movement, and then things slow down a little bit. So this morning, the S&P was stuck in really the trading range of the first 15 minutes until just over the last 10-15 minutes. So all of a sudden, we have a little breakout. You can see that dotted line where my mouse is, right? Just move it, hang on. All right, sorry. Over the break, I got a little bit of a mini cold, so I'm sneezing. So I'm still here. I just muted the microphone so you wouldn't hear me sneeze in your ear. Thank you, Scott. All right, so with the S&P, what I was pointing out is here at the top of these 15 minutes in, we had a little bit of resistance, and the S&P just hadn't broken out of that trading range until just 15 minutes ago, basically, a little bit less than that. So what we're seeing now is a little mini retracement, and when you look at the daily chart, where Dre's saying, I'm wondering if it could break above the 20 moving average. We've got a couple things going on here. We've got on the daily chart, you can see it over here. Let me bring in my pen. With the yellow background, this is a 20 exponential moving average right here. So the S&P is trading up toward that level, and we know that sometimes that can be resistance. On the 5-minute chart, we have a breakout, and things are starting to pull back here. And so what we're dealing with is the question of whether or not this move is going to be strong enough to be sustainable. The breakout above this, the 15 minutes in, is this going to be sustainable? Are we going to see an uptrend? And if we are, can the S&P break above the 20 exponential moving average on the daily chart? So those are a couple things that we need to watch for. The retracements become really important in that, because the breakout is one thing, and that's great that it was able to push above the upper band and break out. But what's more important, how does it behave on the retracement? We're 2 candles down. Is it going to stay above the top of that bullish breakout kind of candle right there? Well, not the top, I mean the bottom, where I'm drawing this line. This is one thing, these lines don't stay. With the way E-signal is constantly refreshing, the lines I draw won't stay on the chart, but that's why you scribble a lot. But if you can see it here, the top of that candle body, the bottom, I could use the right words, that would help too. The bottom of our breakout candle body, right there, this is in potentially a rising 3 pattern, right? So as long as the S&P stays kind of in this area, it tends to look more bullish. So this is where you start to get your questions answered of whether or not things are going to trend, whether things are going to move higher, if this move is sustainable. It comes on how the index or the stock behaves on the retracement. So now we see the retracement on the S&P. Can this hold? Is it sustainable? Are the buyers going to move in from here? And if they do, we have a bullish momentum kind of a push here that is tradable, and that tells us it's more likely that the S&P could power above the 20 exponential moving average on that daily chart. Hey, Thomas is asking, is it a W pattern on the S&P on the 5-minute intraday? It's got a little bit of that. You can see kind of the first leg, another retracement here, and then a breakdown, and then that rally. What's interesting about this is there are different versions of W's. Have you guys seen this? Let me do this. Let me just show you on like a notepad here, just a second. I'll just show you have you seen what I'm getting at? Have you seen the different versions of W type patterns? So there are a few of them out there, and it's kind of interesting because it might not be exactly what you think. I teach this. If you guys have the trend trading DVDs, this is something that I show in there. It's not letting me with my word pad, maybe because I'm in drawing mode. Let's try this. There we go. Oh, Dre's asking, did my DVDs come out on Valentine's Day? They were supposed to be done. In fact, speaking of, hold on a second. I got a message Saturday night. I was out with some friends, actually. And here it is. This is from the guy that's producing the DVDs. I had to pull it up again. He said, I just wanted to give you a heads up. I'm finishing up the final touches on your videos, reviewing them for the last time before sending them out, and I have to say that they look pretty great. And I'm usually my harshest critic. That's exactly the text that he sent me Saturday night. So Jason's been probably working a ton on it. So there you go. So if he's happy with it, that says something. So I'm pretty excited. So they should be, if they aren't out yet, it will be probably moments until, in fact, once he hasn't finished up, I think they'll have to build the systems into our program to be able to sell it to you guys. But so call customer service. I will tell you, if you want to get those, this is probably the last day you could get that pre-sale price, which would be pretty awesome if you get the pre-sale price, and then basically the DVDs are done moments after. So check that out. Yes, Debbie, you should be looking at a blank screen. Yes, you should. Only because I was going to come over here and draw a W pattern for you. So there we go. Let me just catch up the questions here, and then I'll show you the W pattern. Okay. Oh, and we'll look at Facebook. So, Greg, I'll check that out. Mike, what else do we get from an instructor named Greatness, right? Yeah. All right. Yeah, so Dre asking, can we still get them at a discount? Because they don't have the system, and I don't know how this works, but you know, we do a lot of sales online. You guys can go online and buy pretty much everything we have right from our website. And so that takes some programming for each individual product. It's built out into this online system. So my point is, if you call today, I can't imagine they've got it set and they've got the programming done. It's not like, you know, forever long programming, but it's just a quick little addition into that product. So I don't think it's done yet. If you don't see it on the website, it's not. So if you want to get those, I would call today, call customer service and get that pre-sale price. And honestly, I don't even know the pricing. I don't know what it was. But I know it's going to be a lot less today than if you buy it tomorrow. And that's my feedback. I haven't verified with Sylvia as far as their sales, but if Jason was just finishing them up and putting the final touches on, you know, Saturday, Sunday through the weekend, then it's likely they're just getting, in the BetterTrades side of things, they're probably just getting the information today to do the build out for you guys to be able to buy those DVDs online. All right, there we go. So let me show you the W pattern, and then we'll go back to charts. How's that? You know, Trey is asking about my next step classes too. I was just texting Bill last night about that. I have only been to taught one next step so far this year. Bill's really, really weird. So I would like to try to go to some coming up. I'm hopeful that I can make it to, what was on the schedule? I know San Antonio was looking like one that I'd likely be able to make. Charlotte, yeah, I saw Charlotte come up. I mean, there are all sorts of great cities that I want to go to. I love hanging out with you guys. I love travel. I love going to visit some of these cities. So I will look at my schedule here this week, and I'll get it figured out, because next week I will be in Chicago all week with Bill and a handful of you guys there for the 5-day. And we're doing the 5-day for the first time at the Chicago Board of Options Exchange rather than in Atlanta. So I'm pretty excited about that. I think it's going to be a great class. I'm looking forward to that. So I'll see some of you there. So what I will do is I will get things figured out, so at least you know what to plan for. Here, I'll get it figured out this week, so then you can look ahead and kind of plan for things. Next week, just so you know, we won't have the Unplugged class, the free class on Tuesday. We will also not be holding Traders Talks or Labs or even Market Insights. We'll give you an extension. If you're subscribers to any of those products, we'll extend you for the entire week, just because it's a, you know, traders intensive. It's an intensive class. We want to have all the time with you guys that we can. So that's what we will be doing. But I will get you my schedule. I'll get that up online here for you guys before I head to Chicago for sure, so you know what to plan for, okay, as far as next steps go. But it's not too late to come and join us in Chicago. We have just a handful of people. It's such a great experience to really get a lot of one-on-one time. And being in Chicago, we're closer to some of you than we usually are in Atlanta, so consider it. I just bought my airfare the other day. It was still very reasonable. And some of you that are within driving distance, come hang out with us. I'm telling you, it's a pretty great experience when you can take what we go through, you know, in 2 days, and we can get a lot done in 2 days, but you don't have that repetition day after day like you do out of the 5-day class. And especially if you're coming for the first time, we include all sorts of subscriptions for you, so we don't want you coming there and feeling like you have to buy something else. We don't want that. We want you there. We want you to be able to focus on your trading, and then also leave with all the subscriptions and the follow-up help that you could possibly need. Okay, now let me show you the W pattern, and then we'll get rid of this blank screen. Somebody had asked about the W in the 5-minute chart, and it made me think of our 3 variations of W's, right? So there's a W, just a stock that sells off, bounces, and sells off. Again, it comes back to kind of a horizontal level of support, and then the buyers start moving in, and we see this push to some new highs. So you have kind of this W pattern, right? It's a bottoming pattern. You also have another version where the W you'll sell off, and you'll see a bounce, and you'll see another sell-off, but the second sell-off won't go as low as the first sell-off. And then there's a third variation where the second sell-off actually goes lower than the third. And if you've seen me teach this before, I mean, some of you guys have heard this from me. Some of you maybe haven't. Out of the three, which is the more bullish W pattern? What do you think? There we go. See, I can't even trick you guys. Most of you are saying the last one, and there we go. Some in the middle. You would think the middle. I'll tell you, logic would dictate that the middle one would be the most bullish because it didn't make a lower low, which, you know, there's something to that. The middle one, we had a low, then it couldn't make a lower low. That is certainly bullish. But the thing about pattern number 3 here is this area right there. When you have a sell-off like that, where it pushes to a new low and then reverses, what happens is you have a washout. It is where all the sellers have been washed out and things are moving to new highs. This is one of those little tidbits I picked up years and years and years ago, just traveling around, going to different seminars, and there was a guy that I went to hear speak one time he's a really good trader, and he threw this out, and I thought, probably like a lot of you guys, that this second one would be the most bullish pattern, and he explained, no, I mean, really what happens over here, that third pattern, is that if you do see the markets or a stock break down to some new lows and then the buyers move in, usually the buying pressure is more of a, like a frantic, everybody piling in and driving things higher that causes a much stronger upswing than what you would get where you already had that higher low. So they're both bullish. It's just the one on the bottom tends to create more emotion and tends to create an initial surge that is even stronger. So you have a bigger movement before the next retracement, because we know as things go higher, they'll move up for a while and then they'll pull back and then move up, right? But this bottom pattern, usually the momentum is such that it's so strong you don't have the retracement as early as the middle pattern. So hopefully that helps and makes a little bit of sense there. Yeah, exactly. Mike's saying if it broke above that beginning area, even with the lower low, it has to be considered a stronger move. Yeah, it really is. So let me do this. Let's come back and switch back to charts, and I'll jump over to that 5-minute again. So we have, as I look at this pattern on the S&P, we have a little bit of that, right? You see that the S&P right here, it broke down to a lower low. In fact, I looked at this, I was watching this, and I sent out some chart watch alerts, and I was kind of watching to see where things were going to go. It was a lower low, but it also was a Bollinger Band pinch at the time. So we didn't have a lot of clarity there, but it was over here on the right side when it started bouncing. And we see a rising 3-candle pattern right there, and we see the S&P closing above the averages and then pushes all the way up above the upper band. And to me, it's always the middle of the W right here. You can imagine I'm drawing a line off the top of this. When it breaks out above that, which happened right about there, that becomes your signal that, yeah, the bottom really has been completed and things are quite bullish and strong there. Does that make sense? So some things to look at for sure. Let me, no, I had some questions earlier. Let me catch up to those guys just a second, and we'll look at some other stocks here. Okay. Facebook was one that I said we'd look at. Okay. So here we have on Facebook. Facebook has been a little bit of an interesting pattern because what's happened with Facebook is that it's been more choppy. It's been, in fact, a lot more choppy on the daily chart, right? It's been consolidating. In fact, here, I'll bring this in. Let's see right here. Things to juggle around. It might be easier to see it right here. trend charts. There we go. So you can see that Facebook has not been in a trend necessarily. It's been one of the choppier stocks out there, and it's been this way since November. Super choppy in November, December, January we had a downswing. We had an upswing on earnings. Now, trading post-earnings on Facebook was phenomenal. It really was big, big, big bullish momentum. Topped out beautifully as this long doji right at the top, and then a big breakdown. So we had some big momentum up and down, and from that point then Facebook consolidated here between the 10, 20, 50 exponential moving averages, really slowing down quite a bit. So now we've gotten this post-earnings momentum push both up and down, and then Facebook traded into all this chop. Well, this morning I sent out a chart watch alert when it became clear that Facebook was forming a bearish engulfing candle on the daily chart. Now here's the thing. Is Facebook in a trend? So it's not really in a trending pattern, right? So it's not in a trend. However, it's got this resistance from the gap fill. Do you see what's going on over here? Where it came up, and I'll put a red line here. When it gapped down on after the post-earnings retracement, it created this gap right here from the 5th of February to the 8th. Right now, the last couple of trading days, Facebook has traded up and filled that gap, and it sold off. So Friday, gaps up, sells off. Today, gaps up, and it was selling off, turning bearish engulfing. To me, those are two really negative signs that it cannot trade any higher. And now it's back down below the top of the rectangle pattern and moving lower and heading toward the bottom of the rectangle area. So we're seeing some choppiness and some weakness here on something like Facebook today. So let me show you now on the 5-minute chart. It was around here when I sent that alert out. It was before Facebook had filled the gap that I sent out a chart watch alert saying, hey, it's basically, what did I say? I can't remember what I said. Hold on, let me find it. It's somewhere in here. Oh yeah, I said Facebook. Okay, you can see me. This is my application I used to send them out. Facebook testing the 10 EMA on the 5-minute chart as resistance. That was it. All right, so this was that last alert that I sent out. So this was on a retracement. Let me see what time that was. I'll show you. I'll walk it through with you. 11:51 Eastern time, right? Must be. So 8:51 Pacific. It puts us over here. Where did it retrace to the 10 moving average? There we go. This was it. Over here. It was to the right. So it was after the gap fill. It was already a bearish engulfing candle. I just have to remind myself. And it had retraced up to the 10 moving average and started to find some resistance there. So that's when I sent out the alert, because it was pushing lower. We had pieces of information on the daily chart that were bearish, pieces of information on the 5-minute chart that were bearish. So the other thing that we balance that with is this is also, that was right before lunchtime, 11:51, right before lunchtime. We know there's a chance that things can move into the pinch and go sideways. So I look at Facebook here as a stock that breakdown right here was a valid bearish entry. But since that point, it hasn't done much from that alert that I sent out, but it hasn't changed either. We're at the time of day that things are often kind of slow and choppy and sideways. And so to me, this is a pretty standard trading pattern so far today, especially for more of a choppy stock. Seeing that it's broken down, it's starting to move, but we run into lunchtime that kind of slows things down for us. Now, one thing that you could do, you could trade that, and trade it because you like the re-entry of that rectangle pattern, you like the bearish engulfing candle on the daily chart that we have right here, and just stick with it and keep your stops in place and give this stock a chance to break down and maybe retest some of these previous lows that we looked at. Or if you don't want to hold on through things like this, then don't trade right before that lunchtime hour. Wait, because it becomes fairly clear that things are going to go somewhat sideways through that period of time. So as you guys are paper trading, practice this, because if you don't like if you don't like holding through that kind of lunchtime lull, then wait, because you'll often have another opportunity. And you look at what Facebook has done, they've been sideways enough, we're starting to see another Bollinger Band type of a pinch, right? So we may even get a bearish breakdown here. So anyway, hopefully that, it helps some of these, just kind of talking through some of the patterns out there and some of the alerts that I'll send out, but I'll try to send alerts out to notify you of different patterns, and a lot of times they're patterns that are developing that you want to watch and practice trade. And I'd love you guys to do that, do some paper trading around some of those. I think it'd be great. Let's see. Greg was asking, I'm interested to know why you use the 10 EMA on the 5-minute chart, but Bill uses the 5 and the 13. When you use the 20 and 2. Oh boy, and he uses 18 and 2. Okay, so hang on. Oh, for the Bollinger Band, so he uses 18 and 2. I have no idea. I didn't even know he used those. I like the 20 and 2. You can, I suppose the 18 and 2 may move slightly faster. I'm not sure if it's going to be enough of a difference. I learned how to use Bollinger Bands from John Bollinger, the guy that invented them. 20 and 2, they were his favorite settings. So I have used those a lot. To me, why fix it if it's not broken? I like it. Let me show you. There is one other Bollinger Band setting. This is my 20 and 2 setting. Just a really good, solid, standard setting. There is, if you have my templates, if you go over, I have a template called Markay's Fast Bollinger Bands. This is another setting that John Bollinger likes a lot, and it's the 15 and 1.5. Okay, hang on. It looks like my audio cut out. I don't know where it cut out, but can you guys hear me now? What I was just talking about is there are some other settings you can use. So I use the 20 and 2, again, because John Bollinger, those are his favorites, so, he created the indicator. I'm going to stick with that. But then he also recommends a 15 and 1.5 for some faster signals. I find that it doesn't give us as, the signals aren't as clear and as solid as what we get on the 20 and 2. But there is a reason to use the 15 and the 1.5 setting, and it has to do with Bollinger Band pinches. And so those of you that have been through the trend trading DVDs, you know exactly what I'm talking about. Sometimes the 15 and 1.5 settings will do a better job helping us find Bollinger Band squeeze plays on the daily chart. So, for instance, let's see if CMG may be one of those stocks that around this time frame we'll want to use the 15 and 1.5. See how it's just closer to the price graph? If you look at the regular Bollinger Band settings right there, zoom in, there we go. It's a little bit further apart. So there are times where you want to use that 15 and 1.5. Bill using an 18, I don't know, try it out, see if you like it. It's halfway between the two that I'm using, so, you could try it and see. I don't think there'd be a gigantic difference, and it depends on how you're using the indicator. So these are my preferences. Bill, you'll see Bill use, let's see. Bill will use a 5 moving average sometimes. I use a 5 sometimes when it's appropriate. It's a lot of times not appropriate. Often it's too fast for stocks. But there are times where a 5 moving average comes into play, and then when I need it, I add it on. And you'll do that when a 10 moving average is not doing the job. Then you can add in a 5. For instance, Facebook, there's a little period of time where this momentum that it had this morning really was not trending around a 10 moving average. So then you can come down here and say, all right, I'm going to change this to a 5. And you could see how that 5 really would have helped you get out. If you were a day trader, this is the way to do it. Because that 5 moving average, if you switch it out to a 5 over here, you recognize, hey, this is the way to go. It'll help you day trade a little bit faster. And there's your, really right there for sure is your exit above the 5. And you're out. Where the 10 kept you in until that next sell-off. Let me change it back to a 10. So Bill, he may leave it on his charts all the time. I don't, because I find it gets a little bit messy. And there's your 10 moving average exit. So price point was honestly about the same, but sometimes that 5 moving average will give you a faster exit. And he uses an 18 as well. What is it that he uses on the S&P? Is it a 9? Years ago, I used to use something like an 8 and an 18. But honestly, guys, sometimes we're splitting hairs. Think about, on a 5-minute chart, how different an 18 exponential moving average will be from a 20 exponential moving average. You're talking two candles. That's it. And on an intraday chart, where they're exponential moving averages anyway, and the averages adjust with the more current candles and they have a heavier weighting, you're not going to see a gigantic difference. Here, you want to see it? Let's do this. We got a 20. My 20 moving average is in red. So what if I change this 10 out to an 18? Okay. They're pretty close. So there's not a gigantic difference between, oh, and you know what? And this is a 20 simple too. That, you know what, it's not going to let me change that. What I will do, however, let me add them in easily. So the average is, the space that you see there is even, it's further apart because it's a 20 simple. Moving average, there we go. It's been so long since I've added indicators on, now I can't remember. Well, let me change this out to exponential in here. Exponential. This will go to 10. Okay, so there's my 18. There's a 20 exponential. All right. Okay, those two blue lines. That is the difference between an 18 and a 20 exponential moving average. Yeah, Steph, you're right. It's been a long time, huh? There's a guy that we know, in fact, you know, I don't know if he trades. I would assume he's still involved in the market for himself personally. But it's funny, my mom actually just ran into him. His name's Steve. My mom just ran into him a few weeks ago, which is crazy. But yeah, the guy from years and years ago in the tech bubble traded quite a bit, and he would use an 18 exponential moving average, and maybe that's where some of this comes from. But things were moving a lot faster then, so it probably made more sense then. But I'll show you right here. Thank you, Jordan. I'll check that out in 2 seconds. When you're looking at the difference between an 18 exponential and a 20 exponential moving average, sometimes we're splitting hairs, and I'm not sure that it's worth that much time to kind of, you know, really make a big deal out of either one. I think either one is fine. Test the one that seems to work the best for you. If you want to chart with both of them on, go for it. I always like to say that you view these moving averages as a big, thick line. You don't expect stocks to turn at the exact point of that moving average. And there you go. Here's our breakdown. Jordan was just mentioning breaking down below that lower band. So don't expect these moving averages to be right there to the penny where they'll hold the support or resistance, but in that general area. So with that understanding, this 18 and the 20 exponential are both pretty darn close. And that's what we're looking at, is just in this area is the resistance, and there is. So not a big difference between those two, right? And notice now with where Facebook is going, their daily chart this morning, it had already turned bearish. So this is what I like, where you have a stock where the daily chart is bearish. No, it's not in a downtrend, but it has moved to a more bearish area, at least for a swing trade. And so we had those signals this morning. We had another retracement near the moving average as the stock then dropped and pushed lower. So we had places to go bearish, you know, over here. Now, if you were buying puts on the breakdown, tell me where you would be better off on your option fill. We're trying to trade closer to the 10 exponential moving average or breaking below the lower band right now. I'm going to change my style template back to the Markay intraday. If you guys have e-signal through us, you can just right-click and change it back. now this will make, there we go, the 10 exponential, and then we've got the 20 simple moving average again. So when I sent out the chart watch alert, it was over here when Facebook had traded up to the 10 and it was starting to push lowers on that second candle, pushing down. So by getting in there, you've entered closer to the moving averages. This is now confirmation, and it is pushing lower. It's staying in the lower half of the bands. It's below the moving averages. The daily chart is still bearish, and the hope is here that when you look at So when you look at the daily chart, the hope is with the charting that the stock is bearish enough with this bearish engulfing that it may come down and possibly retest the bottom of this rectangle area. Now, even if it goes halfway there, there's enough room to make some money on that downward movement, right? So that's what we're looking for. Yeah, Rose, on E-Signal, does the daily chart update continuously during the day? She's asking. It absolutely does. In fact, you already see this little wick at the bottom of this candle on the far right. That is representing this wick that we see right here on the 5-minute chart. So it updates continually every second, which is one of the things that does make it really nice when you're charting throughout the day, that you can look at E-Signal and look at the daily chart. And I like it. In fact, you guys, if you see my setup, I'm always looking at a 5-minute chart next to a daily chart because I think we can make stronger decisions, better decisions that way. There we go. Brett said, you taught me to draw the moving averages with a crayon instead of a sharp pencil. That keeps me from getting too wrapped up in the specifics of them. Yeah, there you go. It's that idea. It's a thick line, right? Let me show you this template. I know this is going to get a little bit small. Let's see that. Okay, this is a version for you to look at. I've got in white, so my charts with white backgrounds are always my 5-minute chart. And with the yellow background, it's a daily chart. So I've got on this page, I can look at a 5-minute chart. I've got them down the middle. And right next to that is the daily chart. I'll tell you, there's a stock I'll probably be sending an alert out at some point here maybe, is Goldman Sachs. They have been in a pinch most of the day, and they're pinching right near their 10 moving average on the daily chart. So I'm constantly looking at the 5-minute, comparing it to the daily. I sent out an alert earlier about Netflix. It's consolidating around their 10 moving average on the daily. By the way, so is Google. You've got all sorts of stocks that are just chopping around their 10 exponential moving average. Going back to extreme charts just for a minute, it's probably not all that surprising because look at what the S&P is doing. The S&P, we had a bounce the other day. So here we are over here. On the 11th, we had a kind of a reversal bounce day right there. So it followed through the next day. So this was our big upward move on Friday. And then today, we're seeing a continuation of that. So we're basically dealing with a couple of up days in a row right here. I'm curious to see if this is going to hold or if this stock is going to turn around, or the markets, I should say. They're going to turn around and drop below the 10 moving average. Please do pay attention to the 10 moving average on your daily chart of the S&P. In fact, one of the things that you can do, I've got an alerts tab over here that I'm constantly kind of clearing out and putting new alerts in. One thing that I'm going to do right now is I'm going to come in and change out this daily chart. Well, this is my 5-minute, which it should not be. It's a 5-minute setup. What should I do here? Right click, I'm going to go to my style template and make it a Markay daily. So now I have my 10, 20, and 50 exponential moving averages, and then we can come in and you can right click on that 10 moving average, and I'm going to set an alert. I want to know if the S&P crosses below the 10 moving average. Now there may be plenty of trading, to the upside, even if it doesn't, but if things do reverse, I don't want to be caught unawares and not notice that. So I'm going to set an alert. Did you guys see how I did that? It's just double click on the indicator you want the alert set on, and there's the property tab and the alert tab, and I just checked alert when the price crosses the study line. When it crosses that 10 moving average, I want to know on the S&P, and I click close, and as long as I leave this chart set to the S&P, I will get an alert in case something happens and the markets end up breaking down. Those are right there. All right. Where did I've got so many tabs up, and I've lost my tab that I look at with you guys. 5 minute. Where did that go? Did I accidentally shut it down? Where I had my 5 minute chart and my big daily chart. I really may have. Oh, there it is. Ah, I moved all the way over to the end. All right. I need a chart for all my tabs. Brian, Goldman Sachs has been in a downtrend since November. So what does the pinch mean here? So check this out. Link my two charts. That should be linked. There we go. So what does it mean? The Goldman Sachs has been trending lower, and now they're moving into a pinch on the 5 minute. The thing to me that is the most compelling is the fact that the pinch on the 5 minute corresponds to a small doji so far today near the 10 exponential moving average on the daily chart. This may mean that the downtrend is going to continue. If we get a bearish breakdown out of this 5 minute Bollinger Band pinch on Goldman Sachs, if it's breaking down, then we'll have a 5 minute chart that is bearish, right? As well as a daily chart that is bearish, and that'll help us find a place to buy puts closer to the 10 moving average. So now let's take it to the next step here. So what do we do to be able to find a breakdown on that Bollinger Band pinch? Then I come over here to my alert tab and I say, okay, I've got some alerts here set on stocks that are in Bollinger Band pinches: Ambarella, Celgene, Apple a little bit. I'm going to change this one out to Goldman Sachs. Now, all of these have alerts set on Bollinger Bands on their 5 minute chart. Now I'm going to get an alert if Goldman Sachs breaks out. And by the way, if you don't care about the bullish breakout, which I care about either right now, because Goldman is consolidating near a level of resistance on the daily chart, so a bullish breakout is something too, right? But if you didn't want to trade the bullish part, you can come in here, click on the Bollinger Bands. It'll pop this property setting edit chart up, and with the Bollinger Bands highlighted, we can click on the alert tab right up here, and then we can say, maybe I don't want to know if it goes above the upper band. So I can take that check mark off, and I'll only have an alert when it crosses the lower band. But I do want an alert when it crosses the upper band, so I keep them both checked. I don't know if that helps, but see what I'm showing there. Yeah, Deborah saying Ambarella, good setup too. There's so many things going on. Let me catch up. Mike is asking, doesn't Dale use the 1840? He might. He might. I'm not really sure. Let's see here. Okay. So let me jump back. Right there. Look at that beautiful chart. So here we've got the markets that have pushed higher. Remember I said it was all in the retracement? Well, they retraced a little bit and they pushed, but they couldn't make it to a new high. Okay, so now what does this tell us about the S&P? Going back and evaluating the S&P now. Any thoughts here? We're still in kind of technically this lunchtime lull where things go slow for a little bit. So it's not too surprising. But if the S&P is not making it higher and pushing up to a higher high here this afternoon, there is a problem. And I'll tell you, if that doesn't happen, if this is the highest level we hit on the S&P today, this is going to look, in a way, a lot more bearish because we have an S&P that has traded close to a 20 exponential moving average on the daily chart. Does everybody see this here? Okay, so this is what I'm watching for this afternoon, how the S&P is moving. Can it break out? Can it move to a new high? If so, great. It's trying right now. It might do it. Volume's a little bit low, though. Look at volume on the S&P. It's dropping here a little bit. So may this be a valid breakout? If so, great. That will set us up for bullish trades. If not, if it stays below the 20 exponential moving average, then definitely not. We won't have bullish trades, and it's a little more, looking a little more bearish here for us. Right? Okay, and as you know, if you're looking at a way to trade the overall markets as well, the spiders come into play. And I'm kind of curious to see what we do on the spiders. If we don't get a breakout and a resolution here, this is going to be a good setup for tomorrow. I'm hopeful we'll have something this afternoon, but if we don't, got a nice setup for tomorrow, right? Let's see, Mike is saying if it finished near the high on decent volume but didn't break the 20, would that look bearish as well? You know what? It would be, no, it wouldn't look nearly as bearish if it closed near the highs of the day and we had good volume. Now see right now in the spiders, this is a good breakout, and see how volume popped up as it pushed above the previous highs. So maybe we will get that bullish upward move here. What I would say is that if we have a big momentum push up to the 20 moving average, that's certainly tradable bullishly, but then for tomorrow we need to see that index break out above the 20. It doesn't have to happen today. It'd be better if it happens today, but it doesn't have to. So watch whether the S&P is closing at the highs of the day and if volume is big, or if it comes up and cannot trade. If it trades off the highs of the day and volume is low, that's going to be a much more bearish signal than if it does make it up to the highs, right? So yeah, good question. So I don't know, hopefully this helps and gives you guys some things to look at. We're still kind of in this holding pattern on the spiders, and the S&P, really kind of waiting to see, can this break that hold? One big up candle, big volume, and now it's already pulling back. I want to see it sustain. I want to see it push higher and then continue to see bullish candles and continue to see volume. We'll see if this happens. All right, so any questions? Just as I'm finishing up here, there's so many things to talk about, so many things I could show you guys all the time. I'm glad I have this opportunity to hang out with you at least once a week. Do know, again, that tonight we've got, oh yeah, Apple, thank you. We've got Trader Stock tonight. I'll be teaching that, so I look forward to seeing a lot of you guys there. And then next week, remember, Bill and I will give you extensions for all of our subscription classes. In order to talk through Apple, I want to move to extreme charts because I have my lines drawn here. So and I'll show you what we've been watching on Apple for quite some time. In the Trader Stocks and the Market Insights, I've been talking about Apple being stuck. And it is stuck between a support around $93 and around the 10 moving average. And you'll notice it'll pop above the 10 and then drop. So Apple today is consolidating around the 10 exponential moving average. Now, could this be the beginning of another breakdown move? Maybe, but look at the overall trend. See what we've had on Apple is we've had this bearish trend and a steep downward angle on the 10 moving average. Do you see how the angle of the 10, I think, is flattened out compared to what it used to be. And look at our support. So we see the 10 flattening out. We see support. It's gotten much more, it's trading in a much more narrow range, right? So what that's doing, we're seeing a lot more consolidation here between the support and between the 10 moving average resistance level. Jordan saying Apple daily lows were at the lower Bollinger Band. Let's switch it up, check it out. So to me, this has been more of a day trading stock for quite some time, this entire month especially, because we don't have a real clear, consistent trending sign now. It's a downtrend that is really slowing down. You see divergence on the MACD line, see how they're angling up, RSI as well. The lower band is still kind of hanging around here, and the stock pushes near the lower band but then bounces. So we have that. It's still somewhat bearish but a little choppy, right? So when I look at Apple, I think this is really day trading right now. We've got to wait and see where's it going to go. It's popping up enough. I mean, intraday today certainly has been bullish. It's been nice bullish day trading today, but we're also approaching a 20 moving average resistance on the daily chart. So it's something that if you're in trading here and you are day trading it because there is no clarity yet on the daily chart, you tighten your stops up as the stock approaches the 20 moving average that you see here on the daily chart. So it's coming up near the 20 over here. You just tighten your stops up and use this as a protective measure to maybe exit the trade if Apple ends up rolling lower. See what's happened here? Apple's pushing up and it's got a little bit of a tweezer top here. It's pushed up to new highs and then it's pulling back. So we're right in this area of kind of consolidation, right? Even on the 5-minute chart, you can see it. And that could be partially because it is approaching the 20 moving average on the daily. But until we see a breakout on the daily chart and a new trend develop, it's a real short-term, almost kind of a day trading stock until we get some clarity there. And it may take the S&P figuring out what's going on there, right? Because again, a lot of traders on the S&P feel a little bit uncertain as we're approaching also the 20 moving average. We're 2 good up retracement days on the index. So is this going to be a complete reversal or the market's going to roll lower? This is what we need to watch here going forward here this afternoon and into the trading session tomorrow morning, right? So those are things I'd watch. Hey, Beth, good to see you. Beth is bringing up Goldman Sachs, pushing up around that upper band. And let's see. Yeah, I like this. The breakout above the upper band, it's had a bounce off of the 20 moving average here on the 5-minute chart. We know that they were in the Bollinger Band pinch, and so we're starting to see maybe some directional signals here on Goldman Sachs. Yeah, Mike is asking, is this a rising 3 pattern completed? It's a really big one, isn't it? It's a weird variation on that rising 3, but it's gigantic. Look where it started way over here. Right there. So for a good while that I've been talking, Goldman Sachs has been consolidating in that rising 3 pattern. The break above this upper band is a good solid sign. Now, the only thing it's fighting here is this 10 moving average. So if it can stay where it's almost above the 10, if it can push up a little higher and stay above the 10, this can be used for some clear bullish reversal signals. The other thing, too, that we'll get here in a few minutes, remember how I talked about the retracement? So what's going to happen with Goldman Sachs pushing above the upper band, it's a great bullish sign. What we need is on the retracement, we need Goldman Sachs to make a higher low. So we need to see them retrace and then stay above the moving averages. And if they make a higher low, that retracement area can be used for some nice bullish entries. Diana's bringing up Amazon. There it is in a Bollinger Band pinch. They're trying to break out as well. Let's see if see how volume was so big this morning. I kind of like to zoom in enough to get that off the chart, right? Because that way it'll make it a little bit easier to see what volume is doing now. It's still pretty light. So we'll see if we get a stronger breakout here. If volume picks up, that will be a directional trading signal. So Gina's asking, would you wait for the retracement? This is on Goldman Sachs, right? So back to Goldman Sachs. Do you wait for the retracement or do you get in on the breakout? Well, the reason I was talking retracement is because it was already the 3rd candle of the upward move. If you could get in on the breakout on the 1st or 2nd candle, that's great. But if you miss that, if we would have bought calls when I first started showing it, right then and there, what would you do with them now where the stock's throwing a doji and maybe even turning a little bit red? Right? It gets harder to manage that, right? It gets a little bit scary. And you'd wonder if you got in too late and whatnot. So I just found if I can't get in on the 1st or 2nd candle, for me, I'm often waiting for the retracement. I would love you guys to paper trade that. Because as you paper trade that, I think you're going to get a good feel for whether you do want to be trading those breakouts. And if you can catch them right away, the breakouts can be phenomenal, right? But if you're in a little bit late, the breakouts can be pretty scary. If you wait for a little bit and wait for that retracement, the retracement, often your options come down a decent amount in price and they're not as inflated. And you're often getting in closer to your exit. It can be a more, it takes time and it's patience, right? But it can be a more, I don't know, I was going to say relaxing, a more relaxing trade if there is such a thing. Because it gets, to me, I get really, I can get frazzled when you're trading and if we just bought calls on this candle and now it's starting to pull back, what do we do? Should I be hanging on? Should I have gotten them? Should I get out? That's a harder place to trade. But if you get in, right away on the breakout or on the retracement, I think it becomes a more logical trade, and you can just go with the chart pattern and not worry about what's happening this very second. Yeah, less anxious, that's it, exactly. I mean, it's just, the idea is kind of over here. Let me just jump this back. Like, what if you bought calls right there because it broke out? And then if you sit through all of this retracement, can be a little bit disconcerting and scary. And you wonder, oh, wait, bearish, I better stop out, or do you hang on? Well, who knows? And now it's down. And it's still above that bullish candle body, but it's getting kind of scary. And it's not until over here where you're actually up on that trade. Whereas what if you had done it a little bit differently and you saw the breakout, right? So you see the breakout and you wait and you let it retrace and you enter even here where it bounces off the moving average and is pushing higher. Even getting in there, you're still awfully close. You're entering awfully close to your exit, and the call options have come down a little bit. They're not as inflated. Whereas if you're buying the calls right here, they're more inflated, and you're in the trade further away from the moving averages. Does that make sense? So those are some things I'd love you guys to paper trade and practice, because I think you'll find over time you may prefer some of these retracement trades. But practice both of them, please. I do that a lot of times when I'll teach my intraday classes. I'll go through and I'll show the retracement trades and also the breakout type entries, and we'll compare the two side by side. And a lot of times those retracement trades end up being nice because, again, it takes a lot of the stress out of it, and your options are often less expensive to begin with. So it's kind of a nice place to go. It's always a balancing act. If you can get in on the first breakout candle, awesome. But if you're in a little bit later, a lot of times wait for those pullbacks. All right, so guys, I appreciate you hanging out with me. Let's see, Dre's asking, how do you prevent the anxiety involved in trading? Yeah, when you're making wrong decisions, you really do have to try to take the emotion out of all of it. Even getting excited when you're up on trades, you have to just try to just look at the pattern and don't focus so much on how much money you're up or down. When I focus on the money, I don't trade as well as if I just focus on the pattern. And it takes some discipline, and it absolutely takes paper trading. If you will paper trade and practice before sorry guys, that audio connection lost again. But I was just saying, if you'll paper trade and practice this, you'll be able to, I think, get better and better and be able to put the emotions aside a little bit. But again, keep your focus on not so much the money, but on making good technical trades. There we go. Deborah's bringing up Google. Check out Google. Nice pinch on the 5 minutes still. So we'll see if they break out. All right, thank you, Joseph. Yes, I will. Thank you. I'll travel safe to Chicago, I hope. I know there's some of you here that I heard may be coming, so I look forward to seeing you guys there. That would be awesome. Check it out. If you're thinking about it at all, let us know. Call BetterTrades office. Even if you want to talk to me about it, call the BetterTrades office. Talk to Sylvia, and just say, or any of the reps there. They're all awesome. And just say, hey, Markay said you could put me in touch with her, because I'll be around this week. I'm just organizing my house, playing with kids. That's what I do when I don't travel. I'm trading and organizing my house. It's awesome. So if you have some questions about it, if you want to talk more about it, please do. Call the BetterTrades office and tell them to get you in touch with me, okay? They'll do that. All right, thanks, everyone. I appreciate having you hang out with me. It's been fun, as always. Well, take care. Happy trading. And I will see many of you online tonight in the Traders Talk. All right, thanks, guys. Mahalo, Jiva. I'll see you guys later.